Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
If you have market investments as part of your financial plan, then some of the recent financial headlines have undoubtedly caught your attention. If you're wondering if you and your family will be okay financially once all the dust settles, then you probably don't have a plan that you are confident in. Don't worry, Philip Statler, he's the founder and president of Statler Financial Services. We'll talk about the next steps that you might want to take here today, right here on the Statler Financial Radio Show. Welcome, everyone. I'm your host, Danielle J. Martin. Philip, how are you today?
Hey, I'm doing well, just kind of getting back in the office from a little bit of a sabbatical, and but looking forward to the rest of this quarter and finishing out 2024 strong. So, it was a little volatile this past week for sure.
That's right, Philip. We're glad to have you back here talking about this big topic because recently, speaking back to August 5th, we want to talk about what recently happened. Give us the bigger picture. The news and financial shows have been all about the big charts and graphs with the red headlines pointing down. And I'm sure this scared people yelling on our TVs. But what is your take on all of this that's going on?
Well, I think that, we have seen some really high numbers when it comes to the stock market as a whole. And so, look, I wouldn't recommend listening to those people that are screaming on the TV, that are panicking. And, it's a good way to do something that you're going to regret later. It's important to keep thinking straight and make good decisions, good choices, especially when it seems like we're in the middle of a crisis. That being said, though, there's absolutely reason for concern with the markets that we've seen here lately. And these are real issues, right? That caused this little August 5th downturn. Dow Jones was down over 1,000 points in one day. I mean, that's a big decline, Danielle.
Right.
And then you had the NASDAQ was down 6%. It was a scary day for a lot of folks to sit there and watch the markets make that kind of decline. Now, if it was the other way around, it was moving up, we'd all be excited. But it wasn't. It was heading down. And it just wasn't here in the United States. It was in Europe and Asia, and all the markets were under pressure on that Monday, the 5th of August. And I think some of us that have been in the business long enough may have thought back to that day back in 1987, when we had that big Black Monday. And so, thankfully, it didn't end up that way for the week. We ended up it just being kind of one of those, hey, it's a one-day deal, and we managed to climb out by the end of the week.
And, Philip, when things get really rough in the markets, I'm sure many people have questions about this. So how do you talk to people about the difference between a little blip in the radar or a sign of a bigger economic problem in the future?
Well, I think, it's obviously that there's no way, right? There's just no way to know for sure what's going on. We can't predict what the future is going to hold when it comes to the stock market. However, what we can do is pay good attention to the signs that we're seeing on Wall Street, the economic numbers, what's happening in the marketplace, on a regular basis. We can look at those things. And then there's something called the Volatility Index that's referred to on Wall Street as kind of a fear gauge. When that number goes up, people are getting a little afraid of what's happening in the marketplace. But experts use that index performance as a way to gauge the market's concern about risk in the current marketplace. And so that index on that Monday, it soared. It was, I think, did way higher than we'd seen since the first days of the COVID-19 pandemic, which was a pretty volatile time, if you remember back then. Dan, we can't predict the future.
Mm-hmm.
But I can tell you this. Wall Street investors seemed concerned that this could possibly be a sign of trouble, even though, when you look ahead, I rember that Tuesday afterwards, look into what economists were saying, and Wednesday afterwards, what they were saying, there was some fear out there. Ultimately, like I said, when you go into the end of the week, it all balanced out. It wasn't a bad week overall. And to give you an indication, 5 years from now, when we look at a chart, they use weekly numbers. What did the market close at the end of the week? We won't even see this as a blip on that radar 5 years from now. Listen, folks, if you don't have a plan, that could cause havoc when you have a day like Monday. Folks, give us a call at 863-877-1188. That's 863-877-1188 to schedule a core retirement analysis where we'll dig into your current situation to see how much risk you have in that portfolio and make sure that it truly matches up with the amount of risk you should have in that portfolio based on how close you are to retirement. Again, give me a call at 863-877-1188 to schedule your core retirement analysis.
Do not hesitate to call Philip and his team. They will get right to you. Again, that number is 863-877-1188. Do not wait. There's no cost or obligation to talk with Philip and his team. Again, that number, 863-877-1188. Philip, let's go even deeper. Let's talk about some of the economic indicators that you've kind of been watching lately, and what should we be aware of?
Well, I think if we look at the Friday before, right, they had the big crash, if you want to call it that, on that Monday the 5th. The jobs report was a little, I wouldn't say concerning. To me, it was kind of good news, right? Because we want to see the economy slowing down, which means inflation is slowing down. But the jobs report came out, and it showed that the new employment numbers were off. They were way lower than anticipated. At the same time, the unemployment number was the highest we'd seen since 2021. And so that gave some concern. There's still the ongoing concern that the Federal Reserve had kind of waited too long to cut interest rates. As a matter of fact, all the talking heads out there were talking about, well, the Fed needs to call an emergency meeting to lower interest rates now. Well, once they cooled down a little bit and 2 days later, they all retracted those statements and said, well, no, we don't really need to do that now. And so when we get things like this, even professionals sometimes get out there a little bit. The issues that are going on they combined with the ongoing fears that generate more and more chaotic things. And then you take into consideration that it's an election year. So that's another thing that gets added in to this whole thing from an economic standpoint, Danielle. I forgot one thing I wanted to mention.
Yeah.
Is that, I look backwards at the jobs report. I want to look ahead, right? There's several things coming out in the near future. The consumer price index, the producer price index, retail sales, those things are going to have a big impact on the marketplace as well. But here's the deal. If this volatility has really gotten your attention, if you're frightened, here, I want to encourage you, resist the urge to panic and make any kind of rash decision. Stick to the fundamentals. There are things out there. If you've got a plan in place, then stick to the plan. Yes, you may need to reevaluate the plan when we get through this scenario, but let's look at it. There are alternatives to selling at a loss, including using the cash from your emergency fund. It may be that makes more sense than selling something at a loss. Maybe you're one of those folks that decided not to take your Social Security yet. Well, maybe we have to readdress that. Maybe look at that again. And maybe I do need to turn on Social Security now because the economy or the markets hit this little rough patch that Social Security may help me get through. If you have a plan, then you have a map to run on. And I know, folks, this is all scary. Markets are high. We're in an election year. Here's the deal. It's not my intention to frighten anyone. But I want people to understand that this really does seem to be a major market shakeup. Even though it corrected itself out, there were some things that happened that week that put people a little on edge. We want to make sure that if you haven't already, then now might be the time to take steps to preserve their retirement. So here's the deal. We have what we call our core retirement design, where we'll help you design the retirement you always dreamed of. We look at 3 key aspects in that whole process. We want to look at the risk you have in your current portfolio to make sure it is properly aligned with your current circumstances. 2, we want to look at taxes. Are we paying the least amount of taxes possible, not this year and next year, over your entire retirement lifetime? And then 3rd, do we have an income plan in place so we know where our money's coming from month in and month out for the rest of our lives? Folks, this analysis will help take that threat of these ups and downs and the volatility out of that process. It gives you a track to run on. It gives you confidence to know that your money is not going to run out. Folks, give me a call at 863-877-1188. That's 863-877-1188 to schedule your core retirement analysis.
Like Philip mentioned, we cannot see the future and no one knows what will happen or just how bad the losses could be. We can't put market drops on the calendar, but putting a plan in place today can help you make sure that your savings could last no matter what happens with the economy. As Philip mentioned, do not hesitate to call. There's no cost or obligation to speak with Philip and the team at Statler Financial Services. That number again is 863-877-1188. You can call and ask for your core retirement design analysis. Again, that number is 863-877-1188. We're continuing the conversation about topics that you should be having on your retirement planning list. That's coming up next. We'll be right back.
Needing a second opinion on your retirement plan or to see if you are paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 270-201-7080. That's VISIT to 270-201-7080.
Do you actually read your financial statements, or do they get tossed in a drawer and forgotten about? You could be making an expensive mistake by not taking the time to look at them. If you're paying high fees in your retirement portfolio, it could be costing you tens of thousands of dollars or more over your lifetime. Imagine the difference an extra $100,000 could make in your retirement. Statler Financial Services can help you uncover any hidden fees in your retirement accounts. Call today to schedule a time to talk about your situation. 863-285-3815. That's 863-285-3815. When you're close to retirement, every dollar matters. Would you like to know where your money is going? Find out what kind of fees you're really paying. Statler Financial Services can help. 863-285-3815. 863-285-3815. Advisory services offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida.
Time to retire right. This is the Statler Financial Radio Show.
How much is left on your to-do list this week? What about that honey-do list of chores around the house? It's a mile long, right? I already know. The problem with long lists is that they can overwhelm you and cause you to shut down. So let's keep it simple. Welcome back, everyone, to the Statler Financial Radio Show. I'm your host, Danielle J. Martin, alongside Philip Statler, the founder and president of Statler Financial Services. Philip, we're going to be talking now about the 3 topics that people should be having on our retirement planning list. That's what we're going to be talking about today. So let's break it down. What are the top 3 topics?
So I think the top 3 topics that I look at when it comes to planning for your retirement is probably number 1 on the list is income. Where's your income going to come from? How are you going to get the income you need to enjoy your retirement for 20, 25, 30 years down the road, right? That's a long time not to be working and get a paycheck. So we need to have a realistic, a written retirement income plan in place so that we've got that track to run on. We know where our income's coming from, and we're good with the numbers that are coming in there. The second thing is risk. Too many people, when they retire, don't switch gears. They keep doing what they've always been doing, which they put all their money in a growth portfolio. And there's nothing wrong with a growth portfolio, but when you're heading into retirement, what you cannot afford to do is to have another 2008 loss hit your portfolio. I'm talking 30 to 50% decline. That's what you can't afford to have done. And so that's where you need to make sure the amount of risk you have in your portfolio is diversified properly between things that are safe, things that are at risk, and then the risk portfolio, make sure it's allocated properly as well. So risk is the second thing. You want to make sure it lines up with the amount of risk you should have heading into retirement. You got to switch gears. The third thing is taxes. I think people actually forget that there's a tax due when they take money out of their retirement accounts. And that number can be big, depending on how much you're taking out. And so we want to be cognizant of that. We want to make sure that you understand that when you pull money out, Uncle Sam is sitting there with his hands out, and he wants his share every time you take money out. And so we want to be tax efficient with our portfolios. We want to be tax efficient with our income planning strategies. And we want to be tax efficient with our whole retirement planning process. And so I think these are the three main things that need to be on people's retirement planning.
Okay, Philip, so you mentioned income, risk, and taxes. Now explain, why should these topics be included when we're planning for retirement?
So I think if we look at the number one is income, but because let's face it, back in the day, people would have a pension. They would have Social Security, and then they would have whatever they saved. In today's environment, less and less people are going to actually have any kind of pension coming in. I'm going to say probably less than 50% of the folks out there are going to have some kind of pension when they actually retire. And so what that means is it puts a burden on you, the retiree, to put together your own pension plan, making sure that you've got money coming in on a monthly basis. So now we look at Social Security as a big deal, a lot of income coming in. The second thing is we've got to create our own income stream. How do we do that? Well, we do that through our income planning process to make sure that the people have the income they need. We make sure that it's adjusted for inflation to keep up with those type of things, even though that's kind of an unknown out there. But that's the big thing about income planning. I think the other thing is when we look at risk, again, risk needs to line up with where you are in life. And when we get to retirement, it's not the time to be having 100% of your portfolio sitting in the market. And so too many folks head into retirement and they don't switch gears. They don't change the way that they manage their portfolio, look at their portfolio. And that's one of the key aspects of working with somebody, that their primary focus is retirement income planning. It's a different animal, it's a different strategy than when you are working and having to grow your money. So that's a big deal when it comes to risk. And then third is taxes, making sure that, that we're paying the least amount of taxes, not necessarily today, but over your retirement lifetime and over the retirement and the lifetime of your family, to make sure that overall you're paying the least amount of taxes possible. And so we take a look at that, and that's a big part of our core retirement design. And to get started, it's easy, Danielle. All they have to do is give us a call at 863-877-1188 for our core retirement analysis. It's a 30-minute phone call. It's you and I talking about things that are important to you, where you are, where you want to be, and what you're doing yourself to get there, and how we might be able to help you get there faster. Again, that number is 863-877-1188 to schedule your core retirement analysis.
This is the time to speak with someone. There's a lot of uncertainty happening around the world, but your retirement plan does not have to be unstable or uncertain. Take the time. There's no cost or obligation. Talk with Philip and his team. Call that number, 863-877-1188. Again, that's 863-877-1188. Philip, I appreciate you breaking down all of the things of the topics of a retirement plan and why it's important, because if we're feeling overwhelmed by retirement, or we're just concerned that we don't have enough to prepare for it, a lot of people have questions about this. What can we do if we do feel overwhelmed, if we do feel a little uncertainty about making sure if we have enough in our savings? What can we do?
Well, I think that probably, Danielle, the biggest thing is have a plan. right? Because one of the things that I've realized over time is that folks that have a plan are more certain about how their retirement's going to go. Obviously, there's bumps in the road, things happen, but having that plan gives them some certainty. And that takes away some of those concerns because now you know you've got enough to get through retirement. And so I think that's the key is having that plan in place.
There's also that question that many people have is, how do we know if we've saved enough to retire? It's maybe not the top question, but it's on majority of our minds is knowing, okay, have I saved enough? The number one thing that we hear in retirees is that they are afraid to run out of money. So how do you teach your clients or help your clients know if they've saved enough to retire?
Well, I think it's, people a lot of times to me ask the wrong question and they'll ask, do I have enough to retire? And that's really the wrong question. We need to look at it a little differently. We need to look at what am I going to spend in retirement?
Yeah.
And once we know what we're going to have in expenditures, what does that look like? Then we can work backwards and say, okay, yes, we have enough, or unfortunately, no, you don't have enough. And we need to create a strategy, if we haven't retired yet, to increase that amount, or you got to be willing to live off of less income in retirement. And so, and the one thing I would tell people is this: do things in a realistic manner, right? Don't go in and undercut your expenses. I think, well, I won't have that expense or I won't have that expense. Folks, it never happens that way. Folks end up usually spending more money in retirement than they anticipated. So make sure when you are putting together that budget that you are realistic about the expenses that you're going to incur, the amount you're going to want for travel, the things you're going to want to buy, that motor home or that boat to go fishing, or that travel trailer. Those are the things you have to be honest with yourself when you're putting together that budget, because that's the biggest downfall I see is people are not honest with themselves when they create that budget for retirement, Danielle.
That's right. And it kind of leads you to the question of what are my options for generating income in retirement? So I'm not in this space of worry or fear. And so I'm sure you sit down with your clients and give them options on this is how you can invest. This is other ways you can generate some income. Can you kind of go through those options so we can just remind our listeners, these are some ways that you can generate income in retirement?
Absolutely. So there are various ways when we create an income planning process. I'm a big believer in a bucket approach. We create buckets of money, where we're going to draw from, how long we're going to draw out of that bucket from that standpoint. Here's what I will tell you is that we look at taking everything and diversifying between a couple of different things. One, we want to diversify between things that are principal protected versus at risk in the market. We need both. And so that's the first strategy is, what does that diversification look like? And so that becomes a big deal. One of the things that you have to look at when it comes to income is looking at annuities. They were created for that one specific purpose, is to help folks create the income they're going to need over their lifetime. And there's been a lot of studies done now that have come out and said, look, if I just add a small chunk to the annuity aspect of income, that I can have a bigger withdrawal rate over my lifetime. That's a huge deal. Mm-hmm. So we need to be open to all those things. Now, obviously, when we look at those things, there are pros and cons to everything. I mean, you can be in the stock market, and the pro is you can have some great gains. The con is that, hey, you could be down 20, 30, 40% before you know it. And so that's a big deal. Annuities. Hey, they may be safe and protected from downward losses if you're using index type annuities or fixed type annuities. However, there's some liquidity issues, right? You can't take all your money out at one time. It's you got a strategy there, whether it's a 5-year, 7-year, 10-year aspect, but you got to be willing to hang in there for that period of time. So there's different things that you have to be aware of, the pros and cons of every type of investment vehicle that's out there.
Really quick, as before we head into break, Philip, if we can just go into how is retirement income planning different from simply planning to take withdrawals? We just recently talked about it a little bit, but there's a difference in a retirement income plan than taking withdrawals from your retirement savings as needed. Can you go into what's the difference?
You're so right, Danielle, because here's the deal. I call people that take their money out and just withdrawals. It's like opening up the junk drawer at home, right? You got a bunch of stuff.
Right.
You got a bunch of accounts. You may have this brokerage account over here, this annuity over there. Maybe you got an IRA or 401k over here, and you're taking money from something to meet your needs, but you don't have a plan to put it all together.
Right.
And that's where I look at a bucket approach or guardrail approach to what does that look like? Where's my money coming from? Month in and month out, and for how long is it going to last? And that's the question you need to ask yourself. Do I have it written down? Can I look at it and say, this is where my money's coming from for this period of time before I have to switch buckets? Folks, that's a big deal. And again, that's why I created the core retirement design to help people design that retirement they always dreamed of. Folks, give me a call at 863-877-1188. That's 877-1188 to schedule your core retirement analysis.
We like to remind you here on the show, you do not have to plan for retirement alone, so do not hesitate to call Philip and his team at 863-877-1188. That's 863-877-1188. Now, if you have a healthy balance in your retirement accounts, that's a great job, but a healthy balance isn't an income plan. We're going to explain that coming up next here on the show. We'll be right back.
It might ramp up or it could slow down, but inflation never goes away. Do you know how it could impact your retirement savings? Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
It's nice when you get everything on your list in one place, isn't it? Philip Statler at Statler Financial Services agrees. That's why he offers comprehensive retirement planning all under one roof. You shouldn't have to go one place for information about tax planning, another for estate planning, and another for retirement income planning. That's why Statler Financial Services was started. Philip wanted to build a company that could help families with all aspects of their retirement. Statler Financial is more than just convenient, they're knowledgeable and experienced. To set up a meeting with Philip Statler and his team to talk about your retirement plan, all of it, call 863-285-3815. That's 863-285-3815. Statler Financial Services, one stop for a wealth of retirement solutions. 863-285-3815. Advisory services offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida.
Having that financial and healthcare power of attorney set up is huge. The power of attorney is going to take care of you while you're here alive. And that's why I think it's ultimately important that you get those things taken care of.
Time to retire right. This is the Statler Financial Radio Show.
Welcome back to the Statler Financial Radio Show. I'm your host, Danielle J. Martin, alongside Philip Statler, the president and founder of Statler Financial Services. Now we're talking about just because you have a healthy balance in your retirement savings account, that doesn't mean that you have an income plan. You still have some work to do. So this is why Philip is here. Philip, let's get into some of the risks that we need to be aware of to help preserve our income in retirement.
Absolutely, Danielle. So when we look at income in retirement, it's having that plan in place, right? Where is your money going to come in retirement? And so I look at it a little differently than a lot of folks do. I look at a bucket approach. Here's one thing I know is that if you have everything in the market, then if the market declines, you have to be willing to take a pay cut over a period of time. And that's not a good place for a retiree to be. Now, I will say this, you need to have some money in the market. No doubt about it. A lot of folks have more money in the market than they should have. As a matter of fact, I'm going to say that when we look at a risk scale of 1 to 100, a lot of people come in their portfolios at a much higher risk than they should be in retirement. About 60% of the folks out there have too much risk in their portfolio. There's another 25 or 30% that don't have enough risk. They have it all sitting in CDs or all in money market accounts, and they have no risk exposure at all. That's not good either. And there's about 10, 15% of the folks, they've got it right. They've got it exactly where they need to be. And so that's what you have to look at when it comes to income planning is what does that diversification look like? How do I have my assets diversified? And do I have a written retirement income plan? If it's not written, then it's not a plan. And you got to have it written down so you have something to follow to see, am I on track for where I need to be? And that, to me, that's a big deal, Danielle.
It is a big deal. And speaking of a big deal, I know we've talked about this multiple times on this show, Philip, about healthcare. And so what's interesting about healthcare is that the costs are projected to cost hundreds of thousands of dollars in retirement. I know we've heard this many times, but Fidelity estimates that a 65-year-old couple can expect to spend $315,000, that's after tax, throughout retirement, but that's not including long-term care. And I wonder if retirees are prepared for this. So this is why you're here, but how can we prepare them for an expense like this?
So anybody that's listened to my show at any time period at all knows that I'm not a fan of this statistic, right? Because it's a valid point, okay? Fidelity is looking at a couple living, I think, 30 years. And so if you take that math down a little bit, that basically says that you're going to spend, as a couple, $10,500 a year in healthcare. Danielle, I just ran some simple numbers. And if you look at the cost of Medicare, Part B, and then you add in there, the prescription drug coverage for Part D, and then you add in your Medicare supplement, you're almost at $10,500 for a couple right there. So I think they put that big number out there to get people's attention, and it does get people's attention. But again, healthcare costs are like no other, or just like any other cost out there. You have to budget for it. And it all comes down back to that problem of income planning, having that written retirement income plan and using a realistic budget. And these are the numbers that have to be in that budget is your healthcare cost. If you leave that out, you're opening yourself up for failure when it comes to income planning. And we don't want anybody to fail when it comes to income planning.
And I think this is why we need to also share the options for addressing potential long-term care costs, because anything can happen to us, God forbid, but, we may have a disease or some type of sickness, and we have to just be kind of prepared for that. So what are some of the options that you share with your clients for addressing potential long-term care costs?
So obviously there is the infamous long-term care insurance. However, when most people decide to take a look at it at their age, it's overwhelmingly expensive. And no doubt it is. But that is obviously one avenue to help cover and pay for long-term care expenses. I tell you who I see use that most often is folks that have no children. They will typically do a good job of planning and having some long-term care insurance in place. There are other avenues, though, that we can use to plan for some long-term care. One of them is life insurance. Life insurance, some, not all, but some life insurance policies will actually have a living benefit or a nursing home benefit tied to it. So that's an avenue. So that's one that I think is kind of neat, because if you don't use it, somebody's going to get the benefit, right? Not you, obviously, because you'll pass away, but your spouse or your children, your heirs will receive a benefit if you don't need it for long-term care. There's also annuities that have specific applications for long-term care. They may double in value or triple in value for long-term care. Obviously, you may not make a bunch of money on them, but they're there for a purpose, and that purpose is to help cover your expenses for long-term care. Now, obviously, these things all have some eligibility requirements. They've got other things you have to look at. So So they're not easily accessible for some people. For other people, it's not a big deal. So, but again, it's part of the planning process. And to get started with our core retirement design, give us a call at 863-877-1188. That's 863-877-1188.
There's no cost or obligation to speak with Philip and his team, so don't hesitate to call that number, 863-877-1188. That's 863-877-1188. You do not have to plan for retirement alone, so you don't have to do that. Philip, as we continue talking about this topic on the things that you need on your retirement planning list, I want to kind of pivot here on the amount of times that many of us tend to overlook taxes as we're planning for retirement. I think sometimes we're going to wake up one day and be like, it's a dream. You don't have to, we can avoid it someday. How often do people overlook taxes, especially as they're planning for retirement?
Yes, it's funny, Danielle, because probably at least once a year, I'll get a call from somebody that says, hey, Philip, I'm retiring. Mm-hmm. So this will be the last year I have to file a tax return. That could be the farthest thing from the truth. Now, it could be that, yes, you are fortunate enough that all you get Social Security, and so maybe you won't have to file a tax return. Mm-hmm. But that's not, at least that's not the majority of folks I see who have IRAs and have investment accounts. Those folks are pretty much always going to have to file a return and pay taxes. And I think that's what folks forget is that, hey, when you pull money out of your IRA, it's a taxable event. Right. And it affects a lot of things. One, obviously, you got to pay tax on that money you pull out. It can affect how much your Social Security is taxable. And so we look at part of our core retirement design is we look at how can we minimize that? Maybe not today, but how can we minimize that over the lifetime that you're going to be here? We want to look at taxes not today, tomorrow, or next week, but we want to look at them 25 years from now. Mm-hmm. Overall, are you paying less in tax than if you did no planning at all? And a lot of that comes down to looking at Roth conversions, looking at some other avenues that we can use to maybe pay some tax today at a lower rate than what we may have to pay down the road. Again, it takes some planning. It takes some tools to come to those planning processes. But I see too many people that they file a return, they're in a 0% tax bracket, and they're excited. However, eventually they're going to start taking more money out of their IRA, which may bump them up into a higher tax bracket. I hate it when I see people wasting a 0% tax bracket. You could be taking money out of your IRA, maybe paying 0% tax out of it, maybe paying 10% tax on it. It depends on, putting together that plan. And that's, I love to do that to help people minimize their taxes over their lifetime. It can be painful sometimes in the first couple of years if you're having to pay tax and you're not used to it. But if I can pay 10% now, I'd rather do that than have to pay 20, 30% later.
That's right. And as we're speaking on taxes, Philip, if you can just explain also the difference between tax preparation and having a tax efficient strategy for your retirement income plan, because they're two completely different things.
Two completely different things. You're absolutely correct. So tax preparation is simply a historic event, right? It's taking whatever happened last year and recording it on the tax return and sending it to Uncle Sam and paying or getting a refund, one of the two. And so that's the deal. There's no planning in that. That's just preparing your return. Having a tax efficient strategy is sitting down and being proactive with your planning process. That means looking at what tax rates are this year. What are they next year? What are they going to be in 2026? Does it make sense to take extra money out of tax deferred accounts like IRAs, maybe some annuities, in order to pay some tax today at a lower rate than what I might have to pay later? And it's actually putting together a plan. And so that's one of the things that we do in our core retirement design is we put together a tax plan. How can we reduce our overall taxes? And if we can, eventually get folks in a 0% tax bracket. Obviously, we got to pay some tax somewhere, so we pay it up front at a lower rate so that we don't have to pay anything. Doesn't work for everybody. Everybody's different. So before you start messing around with Roth conversions and tax strategies, make sure you sit down with somebody that's qualified tax professional that can walk you through the process and let you know exactly what the tax impacts are going to be. Example, I met with some clients the other day, or prospects the other day. They got blindsided last year because they had this huge tax bill that they weren't expecting. They expected some, but not what they got. Somebody tried to take basically 25% of their IRA and convert to a Roth all at one time. It was painful. Not only that, their Medicare premiums are going to skyrocket this next year in 2025 to the highest they can be. And so that's the other thing you have to be cognizant of, is that when you start taking extra money out, your Medicare premium is an income-based premium. If your income goes up too high, your premium is going to go up in the year after you file your tax return. People don't realize that. That's all part of our planning process, Danielle, our core retirement design and income planning process. Folks, give us a call, 863-877-1188. That's 863-877-1188 to get started on your core retirement analysis.
If you have any questions about retirement, do not hesitate to call Philip and his team at Statler Financial Services. They are here to guide you through a successful retirement. Again, that number is 863-877-1188. That's 863-877-1188. You're listening to the Statler Financial Radio Show. We'll be right back.
Needing a second opinion on your retirement plan, or to see if you are paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 270-201-7080. That's VISIT to 270-201-7080.
Do you actually read your financial statements, or do they get tossed in a drawer and forgotten about? You could be making an expensive mistake by not taking the time to look at them. If you're paying high fees in your retirement portfolio, it could be costing you tens of thousands of dollars or more over your lifetime. Imagine the difference an extra $100,000 could make in your retirement. Statler Financial Services can help you uncover any hidden fees in your retirement accounts. Call today to schedule a time to talk about your situation. 863-285-3815. That's 863-285-3815. When you're close to retirement, every dollar matters. Would you like to know where your money is going? Find out what kind of fees you're really paying. Statler Financial Services can help. 863-285-3815. 863-285-3815. Advisory services are offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida.
Sounds like the mailman's here.
It's time to answer questions from the Statler Financial Mailbag.
Thanks for joining us back here on the Statler Financial Radio Show. I'm your host, Danielle J. Martin, along with Philip Statler, the president and founder of Statler Financial Services. We're diving into our Statler Financial Radio Show mailbag. Philip, this is where we get questions each and every week about all things retirement. So I'm excited to go over some of the common retirement questions. It's our favorite part of the show. Are you ready?
I'm ready to see what's in the bag today.
Okay, let's see. Our first question comes from Jane from Lake Passage. She says, I've been worried about the markets and if we'll continue to see more volatility ahead. I don't want to take any more big losses. How long should I be in cash before I try to get back into the markets?
Oh, man.
Wow.
Jane, I am sorry that you're still sitting in cash these days. That can be dangerous, and people see that all the time, right? We can't time the market. Nobody knows where the market's going to be a year from now. And obviously this year, we have a lot of stuff going on, right? And we've got elections. We're still dealing with inflation. We still have interest rate issues. So So it's hard to say when is a good time to get back in the market because we don't know when the next dip is going to come or when the next bear market is going to hit and it goes back down. So I would say that really and truly in this circumstance, you need to have a well-balanced portfolio. You need to look and see what your risk number is, and then have a portfolio that's designed around that risk number. And then you just start putting some money in. Don't necessarily put it all in at one time, but put 20, 30% of it into that portfolio that matches up with your risk tolerance, and then build it from there is what I would say is a starting point.
Really good insights, Philip. I appreciate that. And Jane, thank you so much for your question. Okay, let's get to our next person. Nancy is from Sebring, and she says, I've worked at a hospital here for almost 18 years. I was planning to work a full 20 years before I retired, but now that I'm thinking about retiring early than planned, before I give my notice, how do I make sure that I'm ready to retire? Great question, Nancy.
That is a great question, Nancy, because that's good that you decided to ask the question before you pull the trigger and actually retire, right? So,
Yeah.
so Nancy, what I would do is say, look, you need to have a plan to make sure that, between Social Security and if you have a pension or if you have a 403B or 401k, that all of that, is going to be able to put together that income plan that's going to allow you to retire and enjoy it. Retiring 2 years early may not be an issue, but you don't know that unless you walk through the planning process. So if you start now and put together the plan, then you can see what that 2 years, 3 years difference might make for you. So you just need to start the plan. And that would be what I would do and recommend for you, Nancy.
Awesome.
All these questions are good questions, but it all still boils down to planning, Danielle. And again, that's why I developed the core retirement design, is to help people plan out and design that retirement they always dreamed of. Easy to do. We'll make sure that you're doing the things you need to be doing. And if not, we'll let you know and see how we may be able to help you fill in those gaps. Give us a call at 863-877-1188. That's 863-877-1188.
There's no cost or obligation to talk with Philip and his team, so do not hesitate to call that number at 863-877-1188. Again, that number is 863-877-1188. Okay, Philip, let's move on to our next question. Let's see what's in the mailbag next. We got one from Scott from Avon Park. He says, a couple of friends I work with retiring at age 62 and claiming their Social Security benefits. I thought I had to wait until 70 to take Social Security. That's his question. He thought he had to wait until 70. Philip, what's your response there?
So nobody has to wait until 70 to take their Social Security. You get the highest amount if you wait till 70 to take your Social Security. But that may not make sense for you. It depends on a lot of factors, Scott. I mean, I look at how old are you? What's your life expectancy? What's the life expectancy of your family? Those are areas that we look at when we start planning for Social Security. So you can take it at 62. However, those folks taking it at 62, they're taking a big haircut. They're taking a big deduction because they're taking it so early. The normal retirement age for most of us out here today is going to be 67. And so at 67, you get what they call your full retirement age, and then you get the full retirement amount. If you take it before that, you get a discount. If you take it after that, they actually give you more. And so that's why when we developed our core retirement design, one of the components is the income plan. In that income planning process, we look at Social Security and look at different scenarios to determine what might work best for you when it comes to deciding when to take Social Security. And so, again, it comes to planning and understanding. And I'll tell you that the folks at Social Security, they're not going to tell you when to take it. That's on you to do that planning and that research to determine what's the best for you, Scott.
That's right, Scott. We appreciate your question. Okay, Philip, let's see who's next. We have one from Bill from Sebring. He says that we were not planning to retire for several more years, but we've had some health issues come up, and now my wife isn't healthy enough to work. So I'm thinking I should stop working to help take care of her. So can you help us evaluate if this is a wise thing to do for our situation?
Well, Bill, I'm not sure exactly how to answer this one because you have to kind of understand long-term care and how that can really impact your finances and your financial decisions. So it really, you didn't say how old you were, so that's a little hard to determine what benefits might be available from that standpoint. So I think that in this case, it's going to depend on a lot of things, Bill. One, it's going to depend on how old you guys are and where you are in terms of Social Security. The other thing that's going to really make a difference is what do we have saved in our retirement accounts and in our other accounts to determine that. And then, if your wife can't work, then the issue is what is the life expectancy that we can have there, and are we going to have higher medical costs? Are we going to have long-term care issues that we have to deal with? And all these things, though complicated in some ways, can be planned for. I think we look back to the whole process that we need to have a plan in place. And everything starts from there. I mean, for us, when it comes to long-term care issues, we have a team that we have in place to help walk folks through that planning process. And that's how we help our clients manage the long-term care impacts that happen in their life. And so I hope, Bill, that answers your question. It's a little difficult without a little bit more information, but hopefully that helps you get in the right direction.
All right, Philip, thank you so much for all of your great insights. And thank you, listeners, for sending us your questions. If you missed out on this opportunity, it's okay. Just give us a call here at 863-877-1188. Again, that number is 863-877-1188. But hey, in case you missed anything that we discussed today or any of our previous shows, you can go ahead and check out our website and listen to all of our shows that we've discussed previously with Philip Statler. They're all archived. All you have to do is just go to the website. And also, wherever you're listening to your podcast, you can also check out the Statler Financial Radio Show as well. So if you have questions about retirement, again, do not hesitate to call Philip and his team at Statler Financial Services. They're here to guide you through a successful retirement. We always say you do not have to plan for your retirement alone. So do not hesitate to call 863-877-1188. Again, that number is 863-877-1188. Hey, thanks for tuning in into the Statler Financial Radio Show. We'll catch you next week.
Information provided during the Statler Financial Radio Show is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. All investing involves risk, including the potential loss of principal. No strategy is guaranteed to be successful.
This radio show is a paid placement.